Good evening, Wizards, and welcome to episode 28 of Wizard Wednesdays. Now, what a phenomenal week it's been for XRP in particular, and for many other altcoins in the market as well. I wanted to actually start off straight away, as we are currently seeing some movement on the XRP pair, going straight into the XRP pair for this analysis. We'll then quickly go over to CoinMarketCap just to recollect on what was covered yesterday in the breakdown video and in the breakdown video the day before progressing to BTC and also influencing Ether yet again with the XRP analysis as well. Now, although we are seeing some movement in the markets, overall we have not seen too much of a shift since yesterday's analysis, and everything right now is still remaining pretty well in line with the overall bias given. So we did see a fairly surprising move with XRP. Huge upside movement was a bit of a surprise. However, what actually happens when you zoom out to a higher time frame and going over to the weekly, even checking the monthly out of curiosity, looking pretty interesting, because even if I do extend this zone or actually duplicate this zone for the sake of visibility from around, let's just drag that a little lower down to around this zone here, what you can actually see is upon breaking below this support floor, also considering this one as well, we've actually come all the way back up and just simply rejected this level. And going over to the weekly, you can see I've drawn a weekly trend line that was the prior trend line before we broke this level. As you can see, the trend line broke, we did come back up and we were holding this region initially, but I did expect that push towards the 78.6 to actually come through. So going back to this for 1 second, as you can see the rejections there and the rejections there as well. We do have a slightly lower wick, so if this does sustain and this does pull back from there, this could simply be a very large push to the upside, whereas the end of the month could still end fairly indecisive or bearish. So for the time being, looking at the weekly perspective and looking at the breakout above, we have the weekly trend line currently holding pretty well in line with the 78.6. And if you go over to the daily, you can see with a bit of confusion over here, it can look a bit messy, but once you switch back to that weekly time frame, you can very clearly see a very solid trend line currently in play. So let's just make that perfect. Pretty much from there to there, we're currently rejecting perfect 78.6% confluence, and of course the downside targets are also quite nicely aligned with our original bias and levels. So if we just get rid of this very quickly, although we know this level, we can kind of visualize this in our heads anyway, go down to the daily time frame and kind of get a bit more of an understanding on what's actually going on. Now, one thing you have to realize with XRP is whenever you see a large manipulative jump or even a dump, but more importantly when you do see a pump, it's very likely, more often than not, that XRP will begin pushing back lower. It's only during actual euphoric and parabolic bull runs that you do see phenomenal growth to the upside, whereas in reality, normally it will always come back down around. And you can see that time and time again with XRP. I mean, it goes without showing and it goes without saying, every time we've seen a drastic pump, I remember calling the reversal on this one, and of course calling the reversal on the daily this year as well, around the 45 to 50 cents region. So it's very easy to understand when you do see these pumps, however long they may last, they are very normally short-lived. And to be honest with you, it's normally due to price suppression coming from Ripple themselves. If they're not actually liquidating more into the supply and just kind of, obviously the escrow isn't helping, but the escrow does get locked up and go back to the back of the queue at the end of each month. If the crypto that's been released from escrow has not been bought or purchased by an institutional or any other entity, by all means, it does get pushed back to the queue, so it doesn't mess the supply. But there was an article today that did say XRP actually liquidated a large amount into circulation. Whether that's true or not, I do not necessarily agree with it. But I do believe and understand that even if it's not from Ripple themselves, there is a lot of manipulation coming from traders, and in particular institutional traders, who obviously have a very detrimental impact on price. XRP, to summarize this very simply, is one of those investments and assets which will, over a long-term period, hold up absolutely magnificent long-term potential, and it has a huge long-term perspective. Of course, we are looking at tackling international territory. We are looking at tackling one of the largest sectors in the world, which is the international payment sector. Not just payments, but international cross-border payments. This is not an easy task by any means necessary. This essentially means an entire shift in the global monetary system has to occur to even consider this becoming a reality. So you're looking at a huge not just a revolution, but an entire global shift of infrastructure to actually begin catering for all of this new technology. So it can take many years. There needs to be more regulatory approval in the market as well. But from a long-term perspective, the prices we're at now are unbelievably cheap in comparison to what they will be in just a matter of years. So you always have to look at that perspective and understand that even if you've seen this large jump, if you're a long-term investor and you buy today at 30 cents, bearing in mind I told people for long-term 24, 25 cents was good as well, you have to look at this with a very clear head and realize that even buying for long-term investments, you could buy here and it would still be a good long-term investment once price comes back around. And if we actually go to the weekly, you can start to see now very interesting setup in play. So first of all, with this trend line, let's just get rid of these fibs, keep it nice and simple. Let's just extend this trend line out to here now, which is the new valid trend line. You can see the trend line has continuously, I'll always show you this, dragged its way lower and lower. And this is the current price point, which is where we're sitting now. But as you can see, the same way I like to draw wedges and trends and breakouts, just giving you an approximate and rough trend line, we do have a huge wedge forming. Now, some people call these flags, some people call these pendants, they call them all these fancy words. As you know, potato wedges is just pretty simple, or triangles, they're really triangles. So looking at this here, you can see although we are below and rejecting this support level, we do still have a very crucial region of support turned resistance up here. And alongside this trend line, if I was to even extend this from this region to that region, you can see we are still perfectly in line alongside the targets with the 78.6. So this is looking like a fairly short-term move to me, and I do believe, to be honest with you, now that this trend line's marked out as well, we could see a little push higher to around 35 cents. So there is a bit of a potentiality to actually capture a short-term movement higher. But overall, looking at what we are looking at right now with the trend line holding and the 78.6% confluence, I do believe we are still going to be going south for the time being. And the reason being is this key level here. It's the first time we've broken below, rejected as resistance alongside other confluences, going over to the daily. Now, that 78.6, absolutely lovely. Let's get rid of that, keep it nice and simple. Got upside trend line there. We've got this trend line here. There are a lot of factors coming into play for this particular setup, and I do believe even with this setup we have slightly gone above, but it is still pretty valid as well. There is a lot of confluences and it is making pretty good sense. So from a 4-hour perspective, we are currently breaking higher. Now, the only thing we need to really be cautious about here, we could do this way, although not really ideal. You can obviously do 4-hour trend lines and stuff, and they've clearly been broken, and you can identify that even upon a break like this, it's easily understandable that XRP could come pushing down even back to these regions first before continuing higher. So there is a fairly substantial setup coming into play very soon, but I am not liking this intraday and intraday price action right now. As good as it looks, we've actually broken above, rejected, which was once resistance turned support. This could very easily be catapulting towards 34 cents next, which I do believe is a very big possibility before another turn down. So as I covered earlier on Twitter as well, in the moment, guys, it's incredibly easy to jump on board and to just jump on board any bullish euphoria or momentum you see. And as you can see, even if you do get wiped out, it can come back, but inevitably the longer term picture is many people are not able to time the market to successfully capture these highs and lows. Now, looking at how this moved before with a huge pump and then a dump, we've pretty much seen very similar movement occurring right now. So whilst you could see that little push higher from a wick, for all you know, that next daily candle could be closing extremely bearish. But in saying that, we are now becoming a bit more confident on that long bias. So although I would like to ideally identify a short position, I wouldn't be doing so unless I see a push up to here. The biggest setup for me right now, the biggest confluence, is the fact this trend line is broken. So from a daily perspective, A, B, C, we've got 1, 2, and technically 3. So depending on how you do it, this is the most valid trend line for me. The reason being is because we've also got that perfect candle recess there, which would have, enticed many people to go short. And this is why I said I'll wait a further push higher first before actually even attempting to enter any short position. So overall, we are facing this region here, push higher, looking at this broken trend line right now, as long as we do remain within these boundaries. So even if the candle pushes up here, but the wick slams all the way back down and the candle body closures are below this region, this is your simple guidelines. It does not need to be complicated whatsoever. So excuse me, marking this level out. As you can see, as long as candle closures remain within this region or below this region, anywhere above, it will invalidate the setup. If we were to see candle closures above here and then tap this trend line, then when we do pull down, we'll be looking at longs immediately. However, if we do actually end up maintaining this level, then we would be looking at a simple pullback of the trend line first, wherever that may be. Ideally, that would be around 0.281 to 0.29. You would then be looking next at a potential pullback towards the trend line here, before inevitably coming back down to retest the 0.265 region again. So there could be many different opportunities at hand, whether that's a short from around 0.33, 0.34 around the trend line. Whether that takes a day or two, we will not know just yet. Or you could easily await, if we do manage to sustain below this region, pullbacks to the trend line, retest short all the way down from 0.315, give or take, 0.32, all the way down to 0.265. So there's a lot of different setups in play, a lot of different fundamentals and factors, but overall, the market has become a bit more tricky over the past few days and weeks. So where we've gone from rapid successions of just being quiet to seeing all of this crazy movement and volatility unfolding, it is a bit hard to understand what's going on right now. So that's why we are just awaiting the market to unfold and do its thing. I've never been one to jump on board during huge amounts of bullish momentum, because I've seen how quickly it can turn around and ruin things. So putting the bearish perspective further to say, let's just go to Ether and have a look at Ether right now. So as you know, in yesterday's breakdown, I did cover the trend line that came up on this weekly time frame. Going over to the daily, as you can see, it is still holding pretty well, and we could fine-tune that a little bit if we need to, but overall, you get the gist. It is pretty much working out well. You can see we've held this region. We also have an EMA here. I'm not sure what EMA this is. 200 EMA. Okay, so we've got 200 EMA lingering there. I had a feeling it might have been that, but I don't know why that's still there, because I do not use moving averages anymore. But a clear level, an identification of what could be going on right now. We have seen a break below this support level. We rejected, we pushed up. We're now slowly coming back to retest this trend line. This was one of the most crucial things to notice, and why this trend line is actually valid. And if we do remain within this region, then XRP will very easily tumble alongside BTC, because the other factors and fundamentals are starting to align. And as you can see from the lower high, lower high, lower high, we still are at a lower high. And if I just swing this out from A to B, currently resting pretty nicely around the 61.8% fib, with a potential push up to around 0.225, even 0.220. Anywhere around that region looks like a pretty nice zone to see an Ether push up to. But overall, although where this is now is breaking above, imagine that daily candle actually closes back below or within the line of the 61.8 fib. That would confirm even further another trend line hold. Plus we have the moving average holding as well. I don't even use moving averages anymore. I think this is just a template that was lingering, but they do come in handy. And as you can see, this has happened before where there's 200 EMA, in particular for Ether. Now let me show you something very, very interesting from back in the day. So this may have been the Kraken chart, I think it was. Here's something pretty interesting. So we'll go to the daily. I may have shown many of you guys this. This is very, very old stuff, very, very old charts. You can see from Kraken all the way on this 200 EMA. Again, I don't really recommend it too much. Again, prehistorically, before everyone started using it, when it got too popular, that's when I kind of took it out of my strategy. But I do use it every now and then for an extra confluence. You can notice this 200 EMA has literally been guiding the price of Ether throughout its entire history. You can see the support level, it broke, rejected again. This was the biggest one for me. Now, many of you remember from a long time ago when I was actually holding Ether, a very substantial amount of Ether, in fact. When this move dropped, this cost me around £100,000 within a matter of seconds. This was one of the craziest flash crashes I've ever seen in my life. May the 7th, 2 days after my birthday, I was in bed. I'm pretty sure it was like 2, 3 in the morning, or stupid o'clock, whatever that time was. I'm sitting in bed, looking at my portfolio. I had the charts open. I was doing a bit of margin trading as well. But overall, just the physical Ether I was holding, when this melted, I can't even explain in words what I was thinking. Even for someone that's very, calm and sensible and rational, during these periods in time, I was panicking beyond belief. It was only when I actually opened up. This was in 2017. This was when I literally opened up the 200 EMA, saw it had just tapped that level. I ended up buying even more Ether, and I think I invested another 50,000 into Ether when it actually touched this level during the flash crash. Probably bought it around there, but instantly I doubled my money again, and that's actually one of the ways I managed to accumulate my Ether. I think I've showcased that somewhere and documented it as well, but as you can see, these key levels that I've got plotted, this is 2017, people, and these levels are just holding miraculously, and this is the importance of having such strong key levels as well. But I mean, if you look at this, if we just zoom out, you can see the guidance, every single downfall. This was back in the day, it was so easy to actually understand long-term investments, and whilst everyone was screaming, you know, trying to catch the trend and do this, that, I was either entering my margin trade buys around this region or just buying more physical Ether around these regions as well. And even here, this is after the bull run. The first place we actually rejected from after the bull run at $1,600. I sold a lot of mine around, I think it was around $1,200, a lot of my Ether, and then we pulled all the way down. We tapped that $600 region. Now, again, whilst it is a fairly solid round number, it makes sense. This was where the 200 EMA was at, and then from there onwards, it's just continued throughout time. So even realistically, we could actually use the Kraken charts from now on as well, because there is a lot of price activity for Ether on Kraken, and it's not as manipulated as Bitfinex. As you know, Bitfinex can be one of the more manipulated markets, but looking at these charts, just scrapping all these as well, giving you a little insight. These levels are plotted from God knows how long ago. In 2018, these levels are still holding in the present day. This is how I actually predicted that Ether pullback many Wizard Wednesdays ago. Because look at this, guys. 1, 2, and then it took almost an entire year to fulfill the retest. And even after all of this, this is why when XRP and BTC was flying through the roof, I was literally screaming, guys, be sensible, be logical, and take into consideration that the market will always come back around to retest key levels. And despite all of this malarkey and short-term information you're processing, the overall longer-term picture is always crucial, and that's exactly what's going on right now. So let's just quickly scrap up these charts, keep it nice and clean, add that to there, drag that to there. You can see we've got a nice trend line in play. Now, if we extend this trend line, it doesn't actually align that well in comparison to the others, so we'll just drag that there. You can see it's actually massively broken, which is a bit of an alarming sign, but thankfully we have other factors in play. Now, if we just clean up this chart a little bit more, let's get rid of all these zones because we do not need them. We'll go back to the Bitfinex chart eventually. You can see that nice wick there all the way down. And Lord behold, on this time frame as well, look at the alignment, the absolute precision, centralized around $144 where a prior zone was. This is the importance of Fibonacci's and using many different factors. Many people believe when it comes to trading or analysis or anything regarding the markets and candlestick charting, you have to just find, you know, a Fibonacci bounce and that's it, or, you know, the trend line breaks and that's it, or the trend line bounces and that's it. It does not work that way. You need so many different confluences, you need a trading strategy, and you need a plan. So let's just go back to the Bitfinex chart for this, having a look at this a bit clearer, because obviously you have to realize, guys, a lot of the trading and the actual price manipulation derives from Bitfinex. It derives from CME futures. Very soon it'll be deriving from BATs. There is a lot of carnage going on in the markets right now, and a lot of the manipulation, which is why I actually focus more on the Bitfinex charts, because a lot of the overall, I presume it's the institutions or whoever is controlling this market, that's how it's a lot easier to identify what's going on next, because they seem to be moving in synchronization with the Bitfinex charts. That's probably why they're the first ones to actually appear when you search it on TradingView as well. So nice trend line bounce, nice trend line holding right now. Going over to the 4-hour perspective, we are seeing some consolidation, and I do feel, to be honest with you, we are going to start surging towards around 225. The reason being is we've broken above, we're seeing some rejections of this trend line now on an intraday perspective, and this is why those intraday timeframes are pretty important. So we're just going to remain focused on this for the time being. Looking at the breakouts above, you can see the trend line broken below, back and forth, support resistance. It's yo-yoing, and it's becoming very detrimental. So there's a lot of trickery going on, and it isn't wise to really be trying to time these markets right now. This was a pretty clear breakout continuation. This is now switched biases, so we need to see how this holds up. If we break below this wick here, crossing this zone out for you guys quickly, if we actually break below this zone here around $212, let's go over to the 4-hour time frame, then we will very well continue with that bias. And this is why the patience and understanding of 4-hour candle closures, daily candle closures, weekly candle closures are far more important than intraday time frames. We can very easily go to the 1 hour now, or the 15-minute and the 30-minute, and be like, oh, okay, consolidation, breakout buy, blah blah blah. The truth is, we're going for long-term movements. We're going for big movements, and all I know is this low, technically lower high, has actually just been wiped out. So one of the biggest concerns for me is, even if it's a short-term push, you could be seeing that pullback first of all towards around $204. Now, once you've seen that region, let's get rid of this. Let's leave this there for now. Let's also get rid of that zone. Let's also get rid of this EMA, although it is looking pretty good. What could be occurring with all of this trick that's going on in the market right now, this is why I'm just trying to stay a bit far back. Pull back after breaking this region, retest around this zone, go back for the trend line again. And only here, again, we can catch the long. I think once we see this pullback here, we will see another push higher. So there could be a nice long opportunity on the cards if we see this come through. If not, we'll be shorting from up there. So this is something I covered on Telegram as well and on Twitter. And there are many people in this market who are against having two different biases. Now, here's the truth. I don't have two biases. I have one overall main bias. I always await price to reach a certain key level or a trend line or anywhere that seems suitable for trade execution. I've always found that if you simply just say, if price hits here, we will short, without waiting any confirmation, or even if you see some confirmation but it may look like it goes against you, if you still stick to that bias, you are becoming married to that bias and you are letting your ego actually dominate and control what potential moves you'll be making in the market. Once you get into a battle with your ego, you're trying to beat the market, you're trying to prove that you'll be right, and it's only going to lead to more disaster rather than good. Whereas if you actually play this correctly and you actually use a bit of logic and be a bit more sensible, although many people say, you don't know what you're doing, it's a bit, you're choosing both biases, that's so incorrect. Because what I'm doing is, let's just use this as an example, because this is very important. Let's say price was to hit this level here. You could very easily have someone that waits for this region to come through, and then they simply short. The minute it touches, they short. That's how it goes. And then, they continue the trend, blah, blah, blah. Does look pretty good, actually, that setup. But let's just use this overall as an example. So let's just say it hits here. This is where many people would enter short. But I prefer to understand what would happen in the event that price goes the other way. What would we be looking at to actually continue and switch bias instantly? The goal here is to never marry one bias. And if something doesn't look possible or something moves against you, you must instantly switch and go straight towards the correct route. So let's use this as an example. Let's now change the color of this arrow. I also understand if price does actually end up breaking through or doing something insane, let's say price goes through, absolutely wipes out this high. I then know straight away this and this could no longer be a possibility. I also understand that what could now be happening is price could be pulling back down to here instead, around this region, to retest broken ground, even pushing a little bit lower. I then understand that price can very easily explode because it's now broken and retested, resistance turns support to then create new higher highs and higher lows. That is why I'm always prepared in the worst case scenario. That's why we do not enter straight away. Even if you see movements like this, we do not enter because there will always be another movement like this. You may have missed this movement, but I gave the call for Ether or XRP, for example, not Ether, to catch this move instead and this move before. And this is why we do not chase the trades. We let the trades come to us. We must almost preempt zones and understand what will happen if price reaches a certain level. Once it reaches that level, you can then literally understand straight away. Now that it's broken, you wait for the pullback and buy. Or if it starts maintaining, you wait for the sell. That is why I'm always prepared 24/7. So even if price starts moving against me or things go wrong, or even if a trade gets hit, let's just say stop loss got hit the other day, first time in 7 weeks, however long it's been, didn't even care because BTC took care of that for me anyway, and it was still in profit and it still managed to counteract any losses. I'm always trying to remain not one step ahead of the market, but one step ahead of the herd in terms of mindset and mentality, and it really goes a long way if you actually practice that too. So again, just wanted to throw some life lessons in this Wizard Wednesdays as well, alongside just the overall chart analysis. But overall, guys, if this does actually maintain this level, disregarding any of these scenarios I just gave you there, just use this trend line for guidance right now. And obviously, if you go over to XRP, again, just using this all for guidance. This trend line is broken. That is a bit of an alarming sign. But also, we can just go down to the body as well. The body is quite crucial, going down from body to body. If I do that, you know the general rule of thumb as well. Although the wick to wick does work, upon breakouts. When it comes to these kind of levels here, price could very easily just pull all the way back down. Again, if this does take this long, then let it be. But I do know with a breakout this large, there is an imminent pullback to some extent. Even if that's 24, 30 cents, or even all the way down to 28 cents, there is an inevitable pullback coming. So we just need to be cautious. We just need to be slow. Let's get rid of this. Let's get rid of this. No, we'll leave those for now. They're quite important still, because we're still within that range. That's something you need to take into consideration. Price, from a monthly perspective as well, simply push down, pulled up, taps this level. We could still be continuing lower. Do not get too ahead of yourselves yet. Let the market close and paint a picture for you. Last but not least, BTC. Going over to BTC, a bit more of a continuation from yesterday and a bit more interesting. We are holding this zone yet again, this crucial key level I've given you all. Let me just hold this. But overall, on a weekly, that Fibonacci is coming through so nicely. It's just too hard to ignore right now. Not to mention, BTC dominance is literally at like 67% now. We have seen a very drastic drop on that end as well. So with the BTC dominance dropping and the altcoins rising, it isn't a long shot to understand. If we do see a continuous breakout higher, we will have to completely remove the downside bias and understand that we'll be awaiting one final pullback, which could still happen before BACT actually launches. And then from there we can start catching major long opportunities, whilst BTC still has this potentiality to actually drop to the downside as well. So still very messy. Nothing's really changed from yesterday. We are seeing some rejections here and there. We are holding this support floor yet again, but overall we're still consolidated in that zone from around 10.4 down to around 9.8. So we're in a bit of a sticky situation. Looking on the daily as well, the only thing that's really caught my interest for a potential short-term pump is this little trend line breaking here. So again, ignore the color. I'll make that purple in a bit. We've broken through. We're now rejecting. We could be seeing some movement here before blowing through the roof, but I'm still pretty confident on that downside bias, because that 78.6 is perfect. This trade is still in profit. The trade's shorts were actually given from 10.8, so you should actually be in at least $600 in terms of BTC movement profit. So that's 600 pips, which isn't, a joke. Even in crypto terms, it's still a decent amount to have captured over a short-term period. But alongside, obviously, that trend line, we also have this trend line as well, which for me is a bit concerning, knowing that we are at a support level. We obviously have the head and shoulders here as well. The shoulders, the head, the shoulders. It is painting a bit of a scary picture, and it is starting to, almost turn against us. But we cannot shift bias just yet, because there's not a clear enough sign. Knowing that you've obviously captured the trades from these regions, your stop losses should easily by now be at around 10,500, 10,400. Keep it nice and tight, because if you do see an upside explosion, you want to capture that profit. Because here's my example for this setup. Let's say this here is your stop loss. This is your stop loss here. Make that nice and thick. And let's just say price breaks up. BTC rips through the sky and goes straight to 10,800, which is still a possibility, but we no longer care what it does next, because we're already in profit. Our stop losses are in profit. This can do whatever it wants now. That's not important anymore. We've already guaranteed a profitable and successful trade. So whatever it does next, it can do so. But let's just say it does break through the roof to 10,800. We've now been closed out in profit after entering here. Now you've been closed out in profit and it's broken through this trend line. You suddenly have a whole new trade setup already forming right in front of your eyes. And then scrapping away this Fibonacci for 1 second as well, keeping this nice and clean. Guess what happens now? Potentially, after jumping towards this region, it could pull back, retest this trend line, and then guess what happens next? You got BACT and all these examples, bang, the next key level. Even though you were short and it went against you, you've managed to take a profit out, catch the retest, and ride this the whole way up. There are so many ways that these people and mentors do not teach you how to actually trade and understand how to actually adapt and improvise towards the ever-changing market conditions. So looking at this as well, 4 hour looks pretty bullish, to be honest with you. It is looking like it could really go for that breakout. Like, even if we do just put it from there are many different trend lines, and this is the problem right now. It's why I wouldn't really advise trying to time this. As long as you're in the short, just keep the stop loss tight and let this do its thing, because it's too messy right now, guys. There's trend lines here, there's a trend line going down there, trend lines broken through there, all kinds of crazy things going on right now. We've got literally, let me just show you how crazy this is looking right now. If you want to go from wick to wick, by all means necessary, you can do that there. Let's not forget that we've also got this trend line going through the price. It's holding a support, but my goodness, is this getting confusing. Now, we've also got a counter trend. over here as well. So in theory, if you want to stick to our main bias and focus on the overall picture, then here's what we can do. We can leave those two there. I'll get rid of that for now. Trend line there, trend line there. If you want to extend this over to there, where the final bit of the trend line was, you've technically already broken through the counter trend. You've retested, hit the trend line. Could be seeing some consolidation before rolling over lower. But for now, I'm really just leaving this to make some movement first before identifying what's happening next. That's why I'm actually throwing a bit more education into this lesson in particular, to keep you guys on foot. But for now, we are still remaining in sync. Everything's moving fine. XRP, let's go back to that one last time. Having a look at this right now, guys, pretty messy, pretty sloppy. We've seen a huge upside explosion. But in terms of factors and what's going on right now, we need to break above this to really confirm that upside movement. As long as we remain below here, then you can still expect absolutely everything to come through again. Worst case scenario, we hit the trend line on a retest. And if I leave this from body to body, let's say it does tap here, you've now caught another potential movement. Let's drag that back there. You've now caught a potential movement all the way down to even these regions here. From a retest there, bang, all the way down, back to the trend line, bang, off we continue with our journey. There are so many factors that come into play right now. The market's being extremely volatile. It's being extremely messy. This can be one of them moments where you want to jump on board, you want to just catch the next movement, you want to make as much money as possible. But I assure you, as long as you've been following the principles, if you've been dollar cost averaging for long-term investments where you're holding here, what I do in these scenarios, I let my long-term investments, for example, I let these explode in value. Now, when they explode in value, there isn't too much of a necessity to actually be trading or margin trading. For example, if you lose one trade, then guess what? In this example, where not only the BTCs win and current profit, it will counteract the XRP loss regardless, because I handle my risk management. But also, even when XRP went against me, technically only the margin traded, whereas in reality, my investments actually massively grew in size. So it's a win-win scenario, and if you can actually learn to counteract your long-term investments with your margin trading, you can actually take more calculative and speculative short positions, because when price does go against you, your overall portfolio has counteracted that loss anyway. And that's a beautiful way to look at it, because normally the general rule of thumb is what you're margin trading anyway in terms of profits per trade will normally equate to the size of your holdings. Unless you have very significant holdings and you're only trading a small amount, overall they go hand in hand. So keep it simple, guys. Again, let's just await a bit more movement. Let's wait for these zones to come through where we'll be either looking to short here or break above, so we'll be looking to go long, going over to Ether. Again, not really giving any trades out on this one, but I do believe there is going to be some form of push towards $225. So just remember, until this level here is broken, we are not going higher anytime soon. And I still do believe even this possibility of around $120 to $140 still very possible. Again, need to break this to confirm this. And if I do mark out a very key level for you, got that level there, which we broke from. So when we broke from this level, broke below, rejected, 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 melted down. After we broke below this support level, which is here, we broke through, we've now rejected, we have a trend line confluence. There's many other factors aligning with this as well. So this could really go hand in hand with XRP. And then summarize on BTC, well, looking at this right now, very messy, very sloppy, but we did just catch that potential trend line break as well. Now, not to mention, this trend line here is now forming as well, so we could be seeing a breakthrough, rejection, bang, bang, fly. There's many different things that could be unfolding with this right now, but I'm still sticking to the short-term bias for the time being, despite how threatening it actually is looking right now, because the overall longer-term picture for me is showing me this huge trend line, which has been broken and it hasn't been retested. So I do believe something miraculous could be happening by this backed launch, and I truly do hope so, because it will give all of us a whole new opportunity at catching one of these prices for the final time before we see the next parabolic run.